same sort of action. Going forward into the week, we have quite a few earnings, smaller earnings thus far. So some of the big ones ending the week in Thursday, FedEx, GameStop, there's two there. Dollar General on Thursday pre-market. Canadian Solar is there as well. And then a few others being Guess in the sort of consumer products on Wednesday after hours. There's also Shift on Tuesday after hours in the EV space. And then Coupa as well on Monday after hours. So just a few. We're kind of easing a bit out of earnings season. We've got through the more major ones, the larger cap companies. So that's sort of subsided. So going forward, just these earnings, kind of playing the similar strategy on sort of daily basis. Some of these, the premiums are fairly high. VIX has been, over, a significant amount for quite a while, over 30 as well. So, that's kind of exemplifying premiums as well, and the weeklies on the earnings are quite overextended and quite uh, overvalued for the premiums. So it makes sense as well because we are getting these 20, 15, 20, 25, 30% moves on earnings. So it sort of makes sense, but some of them go quite out of the money, and they're fairly pricey still, even with let's say a day left on the premium. For example, a Thursday after hours earnings, the premiums expiring Friday are quite overpriced. So that is good there, and kind of continue that strategy. Moving in though, overall, more so on kind of economic indicators, kind of directly correlated with Russia Ukraine. It's not looking too good. I've kind of done sort of like a deep analysis, and basically more so into what's kind of going on, and sort of the economic implications overall, being oil and the commodity pricing, and what the economic sanctions kind of have done overall, and where we think it's kind of going, the solution's going to come, which is I think more so it's going to come sort of from governments, Western governments, and then in addition to that, with the kind of commodity prices quite high, you kind of see that this is quite unaffordable, and it looks like oil is poised to head higher in the longer term. In the short term, I think we've seen the dip where I sort of went inverse oil, just briefly, just for the short term, April expiry. I've took some profits, as it moved up, but still holding a bit because I think for the short term, oil is can come back a little bit, but for the longer term, it's looking like the problem it with oil and commodity pricing, it will likely last a while because it takes some time to sort of subside and solve the problem. And even when you're increasing production, like they're stating they're doing, I'm not sure if they're really doing it, but they're stating they're doing it in the US. It sort of takes some time for the pricing to actually come down on the commodity end, and not just commodity, but mainly with oil. And the same thing goes for wheat and everything else that we're seeing as a result directly of Ukraine, Russia. So with that, I think even in the Western world, so US, Canada, and more so even UK, which is really getting hit bad, because in Canada we have a wide variety of oil reserves, quite a large supply of oil. In the U.S., same thing to a lesser extent, and they are importing oil from Canada, and now Biden is expanded to import from Venezuela and um, uh, two other countries, I believe, and they're importing as well. And they've tried to get Middle Eastern countries to increase output, but to not much avail because they don't mind high oil prices over there. So that's overall, and then in the UK, England, European countries, they're getting really hit because they don't have those sort of oil reserves that we have, and so they're sort of in a bit of a mess there. So that's where you see the really highest prices of oil, and that's really in the end of the day hitting the impact on the lowest income people because the prices are just unaffordable. So when you look at those economic indicators as well, it points to sort of an imminent recession, and that sort of looks like it's unavoidable because you wonder how much longer the average layman folk can sort of last with oil prices this high, right? And then what's also pretty concerning is we've seen the move in nickel, and starting to affect other commodities as well. And as an EV guy, when you see nickel, with nickel being the largest pretty much metal in these lithium ion batteries, and even newer batteries like that Tesla's using, um, and to an even larger extent in Tesla's newer batteries, the nickel is the pretty much the most resource plentiful mineral that's actually needed in sorry metal that's actually needed in to produce the batteries, right? So that's a large part of the content. And with the nickel prices rising, it means EVs also get that hit as well. So EVs are also needing to rise, right? And Tesla increased some of their pricing recently, and they do this a lot, but this one specifically, usually they do it because of demand is so high, they don't want wait times to get too long, which I've mentioned it multiple times over the years, and sort of made those predictions when they're going to increase pricing and whatnot, because I can see wait times in Canada and the US. So it's pretty easy to calculate, at least for me, watching it over time, following Tesla so closely. But this one actually specifically, I think that the price increase is as a direct result of some of these commodities pricing increases, and you could say a little bit of inflation as well, right? So that's a little concerning because there can be the argument made that high oil prices are sort of just an accelerated effect of the natural transition that would occur anyways, of you know human population shifting away from gas and oil to EVs, or oil to renewables. And you could make that argument, but then when we have EVs prices, let's say commodities continue to increase, EV prices rising at a similar rate, or not a similar rate, lesser extent, but it will rise, right? If commodities kind of continue like this, then you have the kind of debacle where um, even the average layman folk on a cheap EV would also get a little bit priced out, right? Because even if you'd like to get, let's say, a Nissan Leaf, and price the cost to produce the battery for Nissan is it increasing, then they sort of have to increase the price. So your price is increasing with the increase in price of oil, right? So you're sort of locked out of the market. You're extremely low income individual, let's say in the US, and you can't afford to drive your gas car, because of the gas prices. Then you also can't afford to buy the EV with the rising prices, right? So that's sort of a concern as well. overall, because it looks like it's starting to impact not just oil, but also has neighboring effects as well around, right? So that's also a concern. But yeah, so that's my thoughts. Overall, with regards to that, there is the factor of inflation as well, and then when we sort of print money to sort of bail out some of these issues and countries as well, then we sort of expand on that, and it sort of accelerates that inflation as well even more. But for the short term, I'm quite bullish, because for the short term, it looks like, with the sentiment and all of the news and everything that's sort of occurring right now, we've had such a large shift to the bearishness, and it looks like we're reaching sort of capitulation. So overall, in the short term, I think I'm quite bullish. So just want to make that clear. But in the longer term, it's looking like a pretty major economic concern that will have pretty large implications. Especially for the Western world, U.S., Canada, UK. It'll have quite large implications. So I'll expand on that a little bit later on in the live session, but I'll just pass it on to DJ, who will go over his thoughts, share his thoughts, and go over his usual SPY analysis.
Yeah, sounds good. So, uh, overall, even with how weak the market seemed to close on Friday overall this week, I wouldn't say too much happened. We're pretty much still trading within range on the daily chart, weekly charts throughout all the indices. So it isn't as bearish as it may seem based on price action. Um, thing to note is we are kind of continuing the downtrend, rejecting from daily EMAs and middle Bollinger Bands here on SPY. But the kind of the speed of how quick we're dropping has slowed down. If you remove kind of the the last hour kind of dump on SPY, really the speed have to drop have significantly slowed down, and we're at a point where next week is really important. We're very likely to break out of the range next week, as in um, we're either going to retest the lows and break bearish and possibly make lower lows onto the 405 level or 400 levels, or we're very likely to go above both the daily EMA and middle Bollinger Band and see it move above 435, in my opinion, on SPY. Or we could get a little bit of both ends, I think. Um, Short term, it is uh, definitely bearish favored. However, I would say that, like we've kind of previously seen, once you kind of find a bottom, SPY bounces significantly hard. Um, the last time we bottomed, we had a 30-point rally in the span of 4 days, and then on the day of the invasion, we had a 27-point rally in the span of 2 days. So these are significant moves. So it's kind of important to realize that even though we're sitting at 420 here, let's say we drop to 415 or 410. If we're looking at a 30-point move from there, we would still get a bounce back to the 440 levels on SPY, which pretty much means that um, the right play, in my opinion, is to still be holding the monthly calls and leaps and looking to add on the way down, and then trimming and scaling out on the move back up once we get that bounce. I don't think it's really necessary to be cutting many positions at this current point in time, just because I think whether or not we make a new low, we're overdue for kind of a 20 to 30 point bounce on the S&P. Skipping away a little bit from technicals, macro wise, I do agree that the Russia-Ukraine war and the impacts of the sanctions, I don't think it's something that you can fix very easily in the short term. There's a bunch of things government can do to kind of ease the oil prices a little bit, or help inflation a little bit in the short term. But I think ultimately you're creating too much of a mess, and I think the Fed is really in a pretty much the worst possible scenario they can be in, where kind of markets are starting to pull, multiples are getting contracted, and they've already printed all the money for stimulus, and they've already got the rates down to 0%. So, typically this would be a time where the Fed kind of comes and, lowers interest rates, or, pumps out more stimulus to kind of support the economy. But we're already kind of near max of their tools, and inflation is not only already out of control, but it's out of control. Plus, you have the war making it even more out of control. So this is really kind of a spot for the Fed where I don't think there's a right answer, and they will kind of try to balance out fighting inflation while keeping the market stable. But in reality, I don't really think they can do too much here. I think inevitably you're looking at a recession come to Europe, and most likely the US as well, all across the world. I wouldn't say it's going to be a 2008 level of recession, because there's a lot of companies that are much more better positioned this time around. Notably, U.S. banks definitely a lot stronger than the past. But regardless, I think this kind of environment with high inflation is not likely to disappear in the coming 6 to 12 months. So I do think there is a big problem regarding to U.S. economy from that end. I think growth is also slowing. GDP is slowing rather than growing because of all of these supply chain issues. And I do think that the smart thing to do would probably be once we get that kind of quick short squeeze rally to the upside, in which I think it's maybe 20-30 point bounce. I think at that point I would be trimming a very large portion amount of the holdings, long holdings, especially I think the ones in shorter time frame like June's. I think September can maybe wait and see a little bit. It really does depend on how everything plays out in the coming weeks or month. Can definitely change many things on the chart, and change many things on the macro level as well. But it does seem like that's the most kind of logical play. I think would be to kind of wait for that 20-30 point move, and then trim out on the way there. And then I think kind of wait to see is the market bottoming with higher lows or not, and then you can kind of re-enter maybe leaps like September or December calls once we get there. But it's seeming very unlikely we can belt up in the current conditions. Like we're not really going to be able to melt up our opinion unless oil is under probably $80. I think if it stays above 80, I don't really think it's really a sustainable level for markets to keep popping up as well. And I do think that a wait and see approach once we get there is most likely the best case scenario. So I mean, plan on my end is to kind of just hold for now and then add on the lows if we get there. And then once we get that 20-30 point bounce, I'll be exiting pretty much a majority of the stuff. And then sticking to either trading or just kind of waiting and seeing what the approach is. It's really hard to say. I mean, there's a lot of scenarios that could occur in the market. Next week is FOMC, which should mostly be priced in actually, but it's pretty much telegraphed that it's going to be a quarter point hike. I think the only thing that could be useful next week is if the Fed comes out with a timetable and schedule for future rate hikes or reducing the balance sheet. That's something the market doesn't really know yet. But the raise itself is pretty much already telegraphed. I think releasing that schedule will provide certainty, and that should help the markets. I think if they keep things ambiguous, then I actually don't think that's very good. I think just having a schedule of some sort, at least, kind of the markets can be more certain of what is more likely to occur. We could see plenty of scenarios next week. The immediate scenario next week, I'm thinking is if we hold the lows of 416 on SPY, I think we can have a rally up to 3% pretty much immediately. I think with how SPY is kind of charted here, we're at this kind of really key point, really key point in time where pretty much the spot we're in right here, I would say, is very similar to the spot we're in around here as well, where we're breaking down to hit new lows, and then we've kind of found a bottom and reversed, and then we're kind of pouring retests of supports and lows and dip, and we're kind of in this chop range for a while. We retest the lows again and this holds, and then we have this 4-day rally to squeeze above the EMAs and middle Bollinger Band. And now I think this was our temporary bottom over here, and we kind of bounced up here, and now we're getting this retest here. And as long as this we don't break into lower lows, we could very well see some sort of move rally back up, look like this, which is kind of what we have there. So I think if we hold the lower Bollinger on the daily, I think we could see a very quick 25-30 point bounce just off that. I think if we don't and we flush the lows, we could quite possibly see a lower low and something around 405 before we kind of see a move bounce up, and then it would be maybe a move from 405 down back up to something like 435. But regardless, I think overall it's just quite favored bullish in the very short term, in my opinion. Weekly chart is a little bit more clear in kind of points I'm trying to make, as in like you can see the low here, it was around 420, and then we had a move to 458. That's a 38 point move in the span of 2 weeks. And then once we found a low again, we had a move from pretty much 411 to 441, which is another 30 point move in about 2 weeks. So I think something similar is likely to occur. I actually think it's it's quite likely, I think, we can actually hold this low here on 410. I think QQQ might make a lower one on their chart later, but I think SPY can actually hold 410 on the weekly here. I think it's quite likely that 410 will actually hold. even though it may break below 415 or so. And then I'm thinking we will see some sort of rally back to test the 440 level or perhaps 448 on a bounce like this on the weekly. And then once we get there, I mean, you can kind of do multiple scenarios where it really depends on the situation, the macro, the sentiment, the everything at that point in time. So I won't get too much into it, but we are seeing some sort of bounce. So we could see something like this play out where, we're looking around, 440 range, which is kind of the target in my opinion. This target I think we should hit even if we're in a bear market, which is what we could be in right now. But right now we're in a correction on the S&P. But even if we were to hit a bear market, we do see some rallies here and there. So I think we'll see this regardless. And the question is from there, if we are actually in a bull market and trending up to melt up, we would see some sort of action like this, where we go back to 470. And that would be a really good spot to really unload everything since you're so close to all-time highs. And that'd be really ideal. But there is also the scenario where we're pretty much heading to a recession and bear market. So once we get there, we might see some move like this and then break down further. Regardless, like I said, the plan for me is to kind of add and get to this bounce, and I'll be exiting around here just to see what occurs. And then, when we get that type of pull, if we were to break up, then maybe reevaluate at that time. But pretty much don't know which scenario it will likely be just yet. It really depends on a lot. I think the conclusion to the war is very important as well. If it drags out, like the longer it's dragging out, is kind of worse for the markets overall because it will kind of suffer more technical damage along the way. Whereas I think if you were to conclude the war at any point in time, whether it's peace or a capture of the capital, in my opinion, that would cause the S&P to rally about 3 to 4% on that news itself. So just that itself would probably be around a 15 to 20 point move on the S&P 500, I think. So I mean, there's a lot of scenarios that could play out. It really depends on the timing and depends on the macro as well. But say next week we get a bounce leading up to FOMC on Wednesday. Let's say we get a bounce to like 435, and then FOMC gets priced in, and we rally another 2% to something like 445, and then typically that's when we were to head back, and then magically, the day after or something, there's a ceasefire or Russia pulls back or etc. And then S&P, pops another 3% gaps up, and then you're at a scenario where you're like over 460 in a span of less than a week. I mean, it really depends heavily on macro headlines, in my opinion. So it's very hard to go technically, but it's a lot harder for bears in the short term than bulls, in my opinion. Whereas I think as long as we don't go into a World War III with nuclear, the S&P is bound to recover in the coming, weeks and months, at least to the halfway point, I would say, where it will kind of rebuild and then possibly make a head and shoulders. But you can't really just continue this downtrend for a very sustained amount of time. You kind of need a bounce before further lows. So that's my thoughts on that, basically. Weekly resistance, we can follow this weekly EMA that's been rejecting week after week. It's currently at 438. Next week, I think it will be down to around 436 levels. So 436 could be a immediate kind of resistance to it, but I think we could see somewhere between 445 next week, honestly, on the S&P. I think as long as we hold, if we manage to hold 420 level early next week, I think we could even see a move to 445 post the Fed meeting. But if not, we'll see. I think the idea is this weekly EMA is heading down kind of rapidly. It's about like 1% or 2% per week, and it's getting harder and harder for SPY to kind of push new lows and new lows each time. Because the amount of bad news that has been forced by the market to price in the last 2 weeks is really like pretty much everything, honestly. And like there's probably already a 50% chance of a recession priced in based on how the S&P is trading, and there's literally every single bad thing priced in there is other than an actual World War III official declaration. I feel like anything other than that has been priced in already. So it's really getting hard for S&P to kind of push lower and lower, but the indicators are going lower, which means I think it's about time we will see a higher low and kind of a break above this, which would send it up and kind of give the bulls a little bit of a relief in the short term. QQQ weaker than SPY, very close to the lows that were made on February 24th. Just about 1% and a bit away, a lot closer to breaking this than SPY, but pretty much the same setup as SPY, and also overdue for quite a strong rally in my opinion. Weekly chart, I think, just kind of the better time frame to be looking at. We could definitely see a break of Thursday's low, like I said, on QQQ, just because we're just a lot closer to it than SPY, but there's a lot of support in the 317, 316, 313, 312, just a ton of support in these levels. And I suspect whether or not we break the new lows or not, you'll see one of these moves where we rally, kind of 30 points up, 30 points up, and we'll, even if we hit something like 315, we get a 30-point rally to 340s. So it's pretty much the same idea on this as well, in my opinion. IWM stronger than both SPY and QQQ. It's very obvious in the chart. The lows were here, and the chart is here, and we're barely trading just below the daily EMAs, and nowhere close the lower Bollinger Band yet. So we're well above lows on IWM, which is basically saying small caps have been outperforming S&P and QQQ day after day, week after week for the last couple of weeks. This is still, in my opinion, an early sign that things will turn around and bounce bullish, and I think that we'll see quite a move back up. If we see a 20, 25 point bounce on S&P, I think IWM can see about a 8% move or so to around, I'd say around this 216 level, and it would actually break the trend back bullish. So that may be a leading indicator for the rest of the markets as well. But weekly chart, still downtrending as well, also rejecting the weekly EMA, but a lot closer to it and a lot higher odds of creating higher low and breaking above it. I think if we see a break above 202 early next week, that could give us a pretty good signal that the markets will recover in the short term on IWM. And XLI industrials, this is pretty much my main position in the markets. It's outperforming SPY, which is what I'm really keeping track of. The daily chart and SPY, you can tell, looks like this, and we're pretty much, we're at 420 levels, which was the same levels as the original low in January 24th, where XLI on January 24th, hit as low as 98, and we're pretty much at the exact same levels here today, and we've bounced up, a lot more, and we've held a lot more ground on XLI. The infrastructure deal is also helping industrial companies, as well as COVID ending, pretty much as well. So I do think that, if we even see that, 5% bounce or so on the S&P, we'll see probably a 6% move on XLI, and that'll be enough to actually put in an uptrend. So I think the calls are priced relatively cheap here, so I think it is worth it. I am starting to get a little bit worried about the June calls because they're kind of out of the money. So I think September is definitely a way to go, but I think in the short term, because I'm expecting a quite a rally on the S&P and the markets in the very short term, I think XLI will at least see back to the 102 to 103 levels on that rally, and I'm sure with the buys at the prices that I've been making the last couple of weeks on XLI, I think those calls should be a lot higher from current prices. So I'll mostly be looking to sell out the Junes, once we get that market-wide bounce, and then kind of trimming a bit of September and then reevaluating there as well. But overall, that's it on my end. So I'm gonna pass it over to Ramji for him to cover this stuff.
Expand on it a little bit more. I did a really deep dive analysis this last week. So actually last Sunday, Saturday, and then I sort of kind of kept watching it and kind of tried to outprove and figure out what's the what could I be wrong on, right? But there's not really much, to be honest. So in the long term, I mentioned it. It's really not looking good for multiple reasons. So I mentioned all of them in the beginning, but just where this Russia-Ukraine conflict, is heading, and the negative implications of it, and I consider myself an independent, but so I like to call out what's right or wrong on either side of politically, but what's going on with Biden and these Western governments, UK government, US government, Canadian government, the decisions they're making with this this war and the implications that's arising from it. It just it doesn't make any sense. It just looks like pure incompetency, and we're seeing the negative effects coming, and it sort of looks like these guys, they're just really like sitting ducks at this point. It's I really don't understand it, right? The I mentioned it last week, but the decisions they're making with regards to oil, it's really it's just a mess, and I can't really wrap my head around it, and what's going on, um for what they're thinking for with these decisions. It really just doesn't make sense. With oil, it's sort of I think people like to complicate it, but it's pretty simple, supply and demand equation, right? And it's not too surprising, the move we saw in oil, which I've been sort of talking about for the past 2 weeks, um, since it started. That I mean, you can kind of look at it. It's sort of, again, it's pretty common sense. Supply and demand, and for some reason, these governments are not really doing much, right? They say they're increasing production, and I mean, we're seeing that, but or at least we'll start to see it if it's really occurring. There's not really much of a way to verify. The press secretary claims that, but we have yet to really see tangible results. But it does take a while for it to subside into the market and into pricing. But um yeah, even in regards to the war itself and how they're dealing with Putin, it's just it's really just not looking good. And the way that Western governments are going about it, and I think, and with regards to the history of how they went about it, so since the beginning, calling, saying they're going to invade, and not sorry, saying they're going to provide military action, and not really doing so. And Putin's invaded, and there's a all-out war going on there, and there's a temporary ceasefire. Not too much of a you know optimistic thing, right? It's really just temporary, and it's since started again. They've bombed a maternity hospital this past week, Russia, and I mean that was verified as well. So yeah, I mean that's not looking good. But more so, the implications of it is really bad, right? So that's why I mentioned in the beginning, I think we're really imminently headed in a recessionary phase. And the implications are pretty bad. And you have to think about what are the ways that this can sort of get solved. And when I think about the ways that can get solved, I just think about money, right? And where the solution, or at least a bit of a solution, can come is through money. But I mean, it involves really the primarily the US government, essentially, you know, fixing the problem through money, and bailing other countries out, right? So we have quite a situation here. And I think also the Fed, they were already in such a sticky situation. And now that they were starting to kind of get a bit of a grasp on, right, and it's looking optimistic a few weeks ago. But now they're at a point where it's really just it's really a mess, and they're really in trouble, I think. So I think inflation will sort of continue rising because of these commodity prices. And I think the effect it's had on oil is looking really bad. And I think, again, oil is poised to continue to rise in the long term. So for a number of reasons, it looks really bad. Also, another thing is, with Russia and where they're at right now, the Russian economy is completely shattered. Um, the Russian currency is completely shattered, the ruble. And then more so, the more important thing, in a perspective of putting myself in Putin's perspective, is the trust in the government and the approval for the government's actions has really taken a crash, right? And um, Russia is has a lot of nationalism, right? So some people don't know the dynamics of Russia, but a lot of this, Russia actually, they support it. Russians support it, right? Because it sort of makes sense, when you actually look at if you put yourself kind of without judgment. Obviously no one supports a war, but if you put yourself in Putin's shoes without any judgment, and without any bias, you kind of see yourself. Again, this is sort of like the Cuban Missile Crisis for the U.S., right? Where uh, Putin is now in the US's kind of perspective, right? So you have NATO, which has agreed that they wouldn't expand, and they've kind of continued expanding. And now they're coming to your Western counterpart, Ukraine. And it's an issue for them, right? So they'll do anything sort of to not have NATO expand onto their border territory. And so at this point now you kind of realize, and you kind of have to look into Putin's perspective to kind of get an idea and a glimpse of where do you think this is headed, right? Because that's the main thing to think about it when you're kind of forecasting where the we end up, as the world and the economy in the near future for this war or conflict, right? And then you look at sort of how it's progressed so far, right? And you think about, they're pretty much completely wrecked at this point, right? And now if you have a negotiation, so the Russian ambassador, he sort of and foreign affairs, they sort of put out, what their demand list of demands and whatnot. But I think that even if their demands are met, right, at this point, it takes quite a bit to recover, right? It sort of reminds me of Soviet times and USSR, where you back them into a corner, right? And there's been arguments over the years. Was it the right thing? Was it the wrong thing? Who knows, right? That's history, right? But now we're sort of repeating history at this point, right? And people kind of rule out the possibility of a nuclear war, but I really don't think that's completely out of the question, right? And it might sound crazy, but that's what I believe, because of the fact that at this point where Putin is at, he doesn't have much leverage, right? Because he's sort of had everything taken from him, right? Or him being an entity of Russia, right? So Russia has had sort of everything taken from them. So now you kind of look at, if there is an agreement to no NATO in Ukraine, does Putin really back down at that point, or does there need to be some consequences for, from Putin's perspective, for what the damage that's been done in regards to Russia, and most importantly, really what Putin as a dictator values the most is approval, right? So you had the approval previous, previously, and you have that nationalism and Russian pride there. The desire to keep Russia, right, and not uh, convert or conform to a Western lifestyle, Western society, and you see the same sort of conflict in the Middle East, right, and the U.S. And you have the sort of lifelong conflict and argument to America of, is it their job to shift a way of life, or a culture or whatnot, right? So you have that argument in the Middle East, right? And so then you kind of think, where is the leverage, right? And really the real leverage in Putin's hand is the nuclear weapons, right? The nuclear arsenal that they have, which it's extremely big. And I think Putin's fairly calculated. It's hard to say if he anticipated all these sanctions and whatnot, but also you see with Europe sort of ramping for getting ready for an all-out war pretty much at this point, which they've never done. It kind of makes you a little bit fearful. And I think if that were to occur, obviously, it's a pretty down detriment overall, and has a lot of negative implications and consequences. And then also, even a little bit unrelated but also related, you have the threat of China as well, right? China, Taiwan, all of that. And I think when you kind of look at it, it's just it's just a real mess. Then you move into the effects of what's occurring right now, right? So that's one mess, right? Then you look at the effects that's occurring right now, and you see a sort of a weakening of American dominance. I think you see a weakening of American dominance with respects to some of their adversaries, Saudi Arabia, Russia, China, etc. Right, and That's another kind of concern. And then you look at commodities, as I mentioned in the beginning. Commodities is a real, large concern. With where commodities are heading. Oil. It's just, with the oil prices rising, you, when you look at the economics of it, and kind of dive deep down into it, we're looking at $2 oil. I'm referring to Canada. In US, it's, some places, $7-8 a gallon. I spoke to some people in London, and over there, I think, converted to uh, a Canadian currency, at least it was something like 285. So a liter. So they're on a different metric system than the U.S. So you rough calculation, you put it at 285. It's around 230 US per liter. Take the liters to gallons, and you can kind of figure it out. But yeah, in Europe, prices are just extremely high in oil. And as I mentioned, I think for the layman folks, it's just not affordable. Even if even not, the layman folk, the average folk, but even, individuals in middle income, etc. Even higher middle income, it becomes extremely unaffordable. And with it only rising, I think it's in the long term, it's going to continue to rise. I think that the implications of that is just, how long can people survive, right? How long can people survive with oil that high? And it's hard to see it happening. So that's something that the government really needs to step in, and it's quite costly, right? And now you have this sort of debate of or sort of a decision, that these governments have, where they're trying to kind of pander to, climate change, and the sort of appearance of a green government. But even when I've been saying it for, the past 3 weeks, but even when Elon comes out, I think a week ago, and says, you have to increase oil production, or the consequences are dire. um I mean, that sort of, shows you all you need to know, right? So it's sort of common sense there, but I think it's going to continue to cost the government the less that they react. And then, you have commodity prices. Many countries, they rely solely on wheat. That's increasing. You have nickel prices increasing. Moving like a penny stock, and again, that impacts EVs. So you have no alternative. So it's a long solution to a really heavy problem. And I think in the end, what you have is you have what will occur because of government incompetence. You'll have the government needing to bail out, um, essentially step in, and what government does that? You have the U.S. government, pretty much. And so that'll be the job of the U.S. government, or the role that they'll have to take on. And that's a mess there. And then, but more so, you have oil prices increasing, and you just think, how long can people really last like this, right? And with that, and then with inflation, it's only exacerbating inflation even more. And with inflation rising, you pretty much look at it, and it looks like pretty much an imminent recession, on the horizon. And when that occurs, possible of, a further conflict, and increased um, intensity of war, possibly. It just looks really bad. So I look at all these things, and it I don't really see how this can't, just collapse, in my opinion. So that's that. And then when I look at the other side, and I try to kind of find counter arguments to my thesis, which I've formed. um really, the only thing, in my opinion, is sentiment. Honestly, it's sentiment here is quite bearish, and I think that's really the only thing that points me to the other direction. And then you have the possibility where government can kind of magically solve everything. Maybe I'm wrong, right? And um, you know then you kind of continue upwards. But what I think is that where we're situated right now and where we've come, I think that there's only so much the government can do, and the effects are already here right now, right? The effects, we're already sort of seeing it, and it's really not looking good. So I think, in my opinion, the most likely scenario, given where we're at right now in the markets, I think the most likely scenario is uh, that we'd go somewhere near, like, halfway to all-time highs, maybe like 440, 450, something around that. And then we'll sort of continue to tank from there. That's my opinion, and that's what I'm sort of poised for, and that's what I think will happen in the short term. So um, I pretty much liquidated, a large majority of my holdings, just shares and whatnot in my portfolio, this past week. But you might ask, why would you do that if you quite bullish in the short term? And for me, I have such a large portfolio, it doesn't really matter, to be honest. If we increase, 30%, 20%, it's not too much of a big deal for me. I don't mind it. But in the short term, I think for majority of people, I think that here is the time actually to just hold and buy, because in the short term, very short term, about a month or so, month, 2 months, etc. But the time is sort of decreasing. But the short term, about a month or so, month or two, I think that it's very bullish because of sentiment right now. We're really, really low. But I think when you get to that midpoint, I think you'll sort of have people wondering, are we recovered and whatnot? But I think the m- overall majority of people at that point, it reminds me sort of a COVID time, right? Where I think if we were to bounce, which I'm anticipating to, halfway to all time high, somewhere around there, then you have people, I think, sort of when the market was still up, and COVID was really increasing exponentially. You had people sort of looking like COVID is increasing. There's all these fear, and the market's still okay. Let me just get out, right? Let me just get out here, right? And I think you'll see the same thing where if we were to kind of increase, halfway to all time highs, I think even people in these high growth stocks, and majority of people are really wrecked, right? Because these guys were in, like, these Robinhood type companies from the top, and they're quite wrecked, right? We were positioned, a little bit better, right? Where we didn't really get wrecked as much from there. But even we were buying, probably my biggest loss right now, like Zoom, right? Where we're buying around 170s, and it's sort of come down since, right? So there is that, but less of a position, less allocated, which is better. But at least on my end, that's probably my biggest loss right now, because I allocated a little bit heavier to that. But still, overall, in the overall portfolio, less allocated since the beginning of the year. But even if you look at, like, most companies, they're down quite a bit, right? And I think when you get to that point, you get to the point where I think people will be like, we have this war, we have inflation, we have all these negative things, right? They might be down 80%, and now they're down 50%. Let's say a Robinhood or something, right? And they'll say, you know what? Let me just get out, right? Let me just get out. Let me just recoup, right? And I think that then that's when you'll see, at some sort of midpoint, then we sort of kind of continue down. And I think that's the point to go short, when we sort of recover. And I think there'll be a large majority of people who think that, okay, we're beginning to recover, the worst is out of the way, right? and they sort of go long, but I think that's sort of the point to go short. So that's why I've not really went short anything, you know, just yet. I don't think now is the time to go short. I think when we get sort of that bounce is the time to go short. But I have went long gold, long silver, as I mentioned last week. After sort of completing this analysis, and I think it's good because gold will perform well in the medium term when as equities sort of get this downturn. So I mentioned the gold leaps which I'm in, and we seen it go to new highs overnight, which was great. It's since come down, pulled back a little bit, but still looking good. This is more of a long play, so holding that, and silver as well, which looks good. In regards to oil, I think as well as I mentioned, I think it's poised to continue to increase in the short term. I caught the top there, and I went with SCO, which is an inverse short oil, and I went calls here to sort of get double leverage. And again, I think in the short term we kind of continue to stay around here or pull back a little bit more. These are at a profit right now, SCO, and I think they sort of pull back a little bit because of the fact that Russia and Ukraine, at least in the very very short term, is getting a little bit better, and that puts a little bit optimism on oil. So that's where we saw the sort of pullback from when I opened SCO. But I think if we get a little bit more pullback, I think even long oil is good. But I think where we are right now, I'd rather go long some safer, something a little bit safer like commodities, or you can go into oil companies, or one of our members, small cap. AB mentioned, the index of oil equipment, for example, which will get better, which I think is a little bit better than oil itself going long. But so yeah, that's a good idea there. Or also oil companies as well, which haven't had much of a move, but I think they'll reap the benefits of this, especially if we sort of increase production. They get that sort of benefit as well, if we really do that, right? So yeah, that's my thoughts there. But yeah, overall I think that especially with inflation, it's exacerbating inflationary pressures. It's moving into commodities, and again, you just ask yourself, where are we headed and how can we solve this? And it doesn't really look good. It looks pretty glim. So that's why I mentioned, I'm sort of I think, in the longer term, in my opinion, sometime, Q2, I think we head to a real recession, and I think it's sort of honestly unavoidable at this point, given where the U.S. has positioned itself in regards to this conflict, and how this conflict has subsided thus far, and the impacts that have come with it. So I think that overall, in the longer term, 6 months from now, for example, I think it looks really glim. And as a result, I think something like gold, which I'm long on, is good. And I think when we go to mid levels from all-time high on the index, which that's what I'm anticipating in the short term, um then is the time to go short, and that's when I'll go short, and I'll alert that, and update you guys. And then I think that's the time to go actually short, on a long duration play, long duration expiry, and long oil. Yeah, you can go long oil, long gold, bonds, and those are the things that will sort of increase as we get this sort of downturn. But yeah, that just wanted to update you guys with that, because it's a pretty major change because of the fact of everything that's sort of pointing towards economically, with regards to Russia, Ukraine. It's just really not looking good. So yeah, but in the very short term, I think that it's very bullish right now because of where we are, and we sort of have to get some sort of bounce somewhere. And with sentiment being so low, I think that a bounce comes soon, and or immediately even. And I think it brings us to kind of a bear trap because of the sentiment has gotten so low that we enter a sort of bear trap where we enter maybe 440 450, halfway to all-time highs, somewhere around that 5% move, something like that. And then that's the point where I think people sort of make a decision, and I think people will be sort of on the edge as well. And I think that's the point where you sort of short. And uh, I just continue to be long gold because I don't mind the short-term fluctuations. It's more of a longer play. I think I think gold, in my opinion, can actually come out of this sort of um choppy and bear market, whatnot, that it's been in. I think that we can see some kind of new highs coming on gold, silver, moving forward. And I think even related to that, I think commodity prices will sort of exacerbate the gain in these metals as well. So yeah, that's my thoughts overall. So in my opinion, in the short term, as I said, even though I said I sold, I think that um, or at least a majority, not all, but I think that in the short term, it's actually the time to sort of be long right now because of the fact that, again, sentiment is so low right now that I don't think we just go lower. I think that we sort of bounce. I anticipate somewhere like 440 450, something like 5% or so, back up, and then we sort of get that real downturn and bear market, and enter a true bear market territory, I think. So yeah, that's my thoughts overall. So yep. And then in the very short term, I think these sort of day trade plays on earnings, mainly playing market maker and selling premiums because of where VIX is at, and where these premiums are at, and the major moves that we're getting on earnings, 20-30% up and down, as a result of earnings. I think because of that, those plays are continue to be good. You'll see I go more safer, like 30% out. I just want sort of a decent premium that's it's worth shorting, but also something I don't have to worry about. Where so far I've never had to worry about it because I'm going quite out of the money, depending on where I anticipate earnings to go based on previous results and Wall Street estimates um, and kind of fundamentals overall. So yeah, that's my thoughts overall. For anyone who missed it, I'll also make a paragraph, kind of explaining everything. But yeah, that's my thoughts overall. So I hope everyone has a great remainder of the weekend, and we'll be back on Monday to go get this money, guys. So I hope everyone enjoys the remainder of the weekend and has a great rest of the night.
Yeah. Cheers, everyone.